Assalamualaikum warahmatullahi wabarakatuh. Good morning, student. How are you today? And this morning, I will explain about chapter first in section of accounting calculation. Okay, before I explain about the accounting for business combination, I will review about material of last meeting. Okay, there are type of business combination. The first is merger, second is consolidation, and third is acquisition. Okay, I hope that you don't forget about type of business combination. Okay, and then the accounting method of business combination. Yeah, there are two uh, kind of acquisition method. The first is acquisition of asset, and second is acquisition of stock. Okay, don't forget that uh, there are two kind of acquisition of asset and then acquisition of stock. Because if we calculate asset will be different with the acquisition of stock, and all of this method must use a fair value ya atau nilai wajar. Okay, fair value. Okay, let's go to the chapter first, section of accounting uh, calculation. Okay, I have make a resume of the accounting of business combination. Yeah, acquisition of accounting. The first is acquisition of asset. Yeah, acquisition of asset. Yeah, if you meet the question about acquisition of asset, yeah, you have do first calculation, yeah, and then make a journal. Okay, and the first about calculation. If you make a calculation, yeah, so you have make a calculation of cost of investment, yeah, cost of investment, choice, and then second is fair value of net asset and book value of net asset. The difference between cost of investment and fair value of net asset we call goodwill. Okay, and different between fair value of net asset and book value of net asset we get differential asset. Okay, after you calculate that cost of investment, you will get goodwill. And then after you finish this calculation, then you yeah next step, yeah. Okay, we will make journal because why we make journal cash receivable inventory building equipment and land because there is a acquisition assets, yeah. So we write the journal. Yeah. What is the asset that will be acquisition? Yeah, acquisition. Yeah. And the first is cash, receivable, inventory, building, equipment, land, and goodwill. Yeah, that have we done of that calculation, and then current liability, yeah, common stock, and additional paid in capital. Okay, don't forget that you have to make calculation about common stock. It comes from share, number of share times per value, nominal value. Okay, and I remind you that cash receivable, inventory, and etc. Yeah, it depend on the uh, It depends on question. Okay, and the second method, if the question about acquisition, you just only make a journal, and there is a formula that if some company acquisition stock, the journal, the account of journal must investment in PT X maybe, Okay, and then common stock and additional paid in capital. Common stock again that it come from a share time per value, and investment in PTS come from share time fair value. Okay, next I will please see on the page 15, on the textbook. Okay, and there are some uh, example of calculation. Okay, combination effective through the acquisition of net asset. And I remind you that net asset, the formula of net asset, asset minus liability. Okay. Next, on figure 1-2, show the book value and fair value of sharp individual asset and liabilities on that of combination balance sheet of share company before acquisition. Okay, and this is a balance sheet of a sharp company, book value and fair value, Okay, you can see it on the textbook, on page 15. Okay, next the question, the information about that question is Point Corporation acquires all of the assets and assume all of the liability of Shark Company in a statutory merger by issuing 10,000 shares of 10 part common stock to Shark. The share issue have to have a total market value of 610,000. Point incurs legal and appraisal fee of 40,000 in connection with the combination on stock issue cost of 25,000. Okay, don't forget that this question, enter the acquisition of asset, because this sentence, saying that Point Corporation acquire of the asset, So in the resume of this diagram, acquisition of asset, first we make a calculation and then journal. Okay, in the first, we have to make a calculation uh, of cost of investment, fair value of net asset, and book value of net asset. Okay, how many cost of investment? Based on that information, we get that cost of investment is 610,000. So we write in this whiteboard. And then what is the fair value of net asset? Fair value of net asset is mean fair value of asset, minus fair value of uh, liability. Okay, and we get that 510,000 because it comes from fair value of asset, 6 120,000 minus current liability 110,000. Okay, we get the 510,000. Okay, next, book value of net asset. Yeah, we make that calculation. Book value of net asset come from book value of asset minus book value of liability. Okay, based on that information, yeah, balance sheet, we get that book value of asset, yeah, okay, 400,000 minus, yeah, current liability 100,000. So we get 300,000. Okay, and then the difference between cost of investment and fair value of net asset, we get goodwill. Yeah, goodwill, yeah, get from cost of investment minus fair value of net asset, so we get 100,000. Then different asset, yeah, based on the different fair value of net asset and book value of net asset, so we get 210,000. Yeah, total of different is cost of investment minus book value of net asset, so we get 300,000. Okay, next, yeah. Okay, the next step is make a journal entries. Okay, okay, we make a journal entry based on the information of balance sheet. Yeah, cash and receivable. Yeah, we choose a book value or fair value. Yeah. Okay, this is a same value, so we, of course, we choose a fair value. Yeah. Okay, don't forget that the concept of business combination always choose fair value. Okay, choose fair value. So in this exercise, yeah, in this example of question, yeah, we always, yeah, choose a fair value, cash of receivable, inventory, land, building and equipment, accumulation, no, patent, okay, then current liability, yeah, okay, so in this data, yeah, enter in the journal, cash and receivable, inventory, land, building, patent, and goodwill, yeah, based on calculation. Okay, then current liability 110,000 and common stock, yeah, common stock. Yeah. It is a special calculation because common stock, yeah, come from, yeah, is calculated come from, yeah, 10,000 times $10, yeah, yeah, number of share, yeah, time per value or nominal value, so we get 100,000. Okay, this is a concept and example of calculation of acquisition net asset. Okay, I hope that you understand in this first method. Okay, next, yeah, uh, combination effected through acquisition of stock. Okay, the question, yeah, Point Corporate exchange 10,000 share of its stock with a total market value 610,000 for all of share company share, and B incurs merger costs of 40,000 and stock issue costs of 25,000. Point record the following entry you point receipt of the share sharp stock. Okay, back on this resume, yeah, that if we meet that acquisition of stock, yeah, so the journal we don't make a calculation but direct make a journal entry, and always, yeah, account is investment in PTX in debit, yeah. Okay, next. Okay, back on this question. Okay, because point corporate exchange of share of stock with a total market, yeah, for all sharp share, yeah. This is a point of this question. This is a question, yeah. All share, because this is acquisition of stock, so we just make a journal entry, and don't forget to write account investment in sub stock. Why we choose, yeah, account investment? Because this is a stock method. Okay, and the value of investment in share stock is 610,000 based on this data. Common stock, okay, 100,000 come from 10,000 share times, yeah, time uh, time per value, yeah. Okay, and then deferred stock issue cost, yeah, and this is additional paid in capital is a difference between total, yeah, total debit and credit, yeah. This additional paid and capital uh, is calculated same in the first journal, yeah. Okay, additional paid capital is a difference between total debit and credit. Okay, this is a concept and example of that uh, calculation. Okay, I hope that you understand. Okay, to, yeah, to mastering this chapter, yeah, I will okay, I will take one of example of exercise in the book. Okay, please see on the page 35. Yeah, please see on the page 35. Exercise A120. Yeah, A120. Okay, this question say that the following balance sheet were prepared for Adam Corporation and Best Company on January 1st, yeah, 20x2, just before they enter into the business combination. Okay, we get the Adam Company and Best Company, and each of these column consists of two, yeah, book value and fair value. Best company two consists of two column, book value and fair value. Okay, and then the information is Adam acquire all of the best company's asset and liability on January 1st 20x2 in exchange for its common share, And Adam issued 8,000 shares of stock to complete the business combination required. Prepare a balance sheet of the combined company immediately following the acquisition, assuming Adam shares were trading at the 60 each. Okay, the first, yeah, the first that you must understand that it is a acquisition of stock or acquisition of asset. Yeah. Okay, this is the point, important point. Yeah. Okay. Based on that information, we find that this is a acquisition of asset. Okay. Adam acquired all the best company assets. So this question, yeah, this question, yeah, it is a acquisition of asset. So based on the resume that I have made, that if we meet that acquisition asset, yeah, we have to make two steps. First, calculation and journal. Okay. Okay. We have to make two steps. First, calculation and journal. Okay. Yeah, the calculation. Yeah. This calculation have to get the goodwill. Okay. The top of that calculation is a cost of investment. Okay, cost of investment, and the middle of that calculation diagram is a fair value of net asset. Okay, and then the bottom of that calculation diagram is a book value of net asset. Okay, okay, let's we calculate that each of diagram. Cost of investment, yeah, cost of investment, yeah, 480,000. How come this is? Because, yeah, 480,000 come from, yeah, in data, yeah, 8,000 share times, yeah, times 60. Yeah, so we get 480,000. Yeah, 8,000 times 60. Okay, the next, fair value of net asset. What is the value of fair value of net asset? Okay, 405,000. Yeah, yeah, it come from fair value. So we focus on fair value based company. Yeah, fair value of base company 480,000 minus, yeah, minus liability. Oh, this is a two kind of liability, account payable and notes payable. Okay, so we get that number. Okay, and book value, yeah, book value of net asset. So we focus on base company and book value. Okay, book value is a book value of net asset. 250,000 come from yeah, total asset. Yeah, 330,000 minus yeah, account payable and notes payable. So we get 250,000. Yeah. After we make that calculation of cost of investment diagram, so we get the goodwill. Okay. What is the goodwill? How many goodwill? Yeah. Goodwill come from difference between cost of investment and fair value of net assets. So we get 75,000. And what? How many different? Yeah, how many asset differential? Yeah, it's come from fair value of net asset and book value of net asset. So the total difference, yeah, is 230,000 come from cost of investment minus book value of net asset. Okay, in this calculation we get a goodwill new account of this answer. Okay, next make a journal entry. Yeah. Okay, make a journal entry based on this data. Yeah, we must enter each of account cash and receivable. Ya kan? Then inventory, building and equipment. Ya kan? Goodwill. Okay, next. Ya. Account payable, not payable, common stock, and additional paid-in capital. Okay, based on that data, yeah, we write down the cash and receivable. Yeah, okay, 90,000. Yeah, please focus on fair value. Yeah, okay, inventory. Okay, 160,000. Building and equipment 240,000. Goodwill, yeah, goodwill. Okay, 75,000 goodwill. Okay, next account payable. Okay, account payable. Okay, then notes payable, common stock, and additional bid and capital. And don't forget that, yeah, common stock, yeah, come from a number of share times per value. Okay, common stock, yeah, 8,000 times 8 rupiah or $8. Okay, next, this require is prepare a balance sheet of the combination, the combined company immediately. So then, based on calculation and journal entry, we make a combination of balance sheet, yeah, Adam and Best company. So we make a table. Yeah. First is account. Second column is Adam company. The third column is Best company, and the last column is consolidation uh, balance sheet between Adam and Best company, or it combine of Adam and Best company. Okay, Adam company, yeah, is taken, yeah, from a book value, yeah, not fair value, book value, because Adam is a company that purchase other company. Okay, and best company come from the journal that we have been done. Yeah. Okay. Uh, Receivable 90,000, inventory 160,000, building and equipment 240,000. Yeah, accumulated depreciation O, and goodwill 75,000. Okay, Adam and best company is for 800,000, and best is 565,000. Yeah, and then liability and equity, yeah. This company account receivable, account payable, yeah, 50,000, not payable 35,000, common stock, yeah, 64,000, and additional paid-in capital 416,000. Yeah. Okay, don't forget that additional paid-in and capital, yeah, is calculated difference between total debit, yeah, minus total credit. Okay, so and the yeah, right column we get the consolidation balance sheet of Adam and Bess. Yeah, it combined between column of Adam and column of Bess company. Yeah, 150,000. Yeah, plus 90,000. So we get 240,000. Yeah, and the other, yeah, is a same calculation. Yeah. Okay, so we get the total asset of consolidation balance sheet is 1 million, yeah, 1,365,000, yeah, must be same with the total of liability and equity, yeah, 1,365,000. Okay, then we make a balance sheet, yeah, combine on consolidation of balance sheet Adam company and Base company based on that working paper. Yeah, this is a working paper of consolidation of balance sheet. So we make this one. Okay. Okay. Before this is yeah, how to make a solution of exercise, yeah, A1 and 21. Okay. Okay, I hope that this is how to make solution of that question. Before we uh, finish this uh, meeting, I please remind that you must understand or remember that there are two kinds of acquisition accounting. First is asset and the second is stock. Okay, if we make a if we get the acquisition asset, we have two step. First is make calculation to get goodwill, and the second journal. And then if we meet that acquisition stop, we just only make a journal entry, and don't forget the account is a investment in PT stock. Okay, thank you very much, and I hope that you understand. Thank you, and assalamualaikum warahmatullahi wabarakatuh.